Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to The Money Factor. I'm Richard Naylor, your host. Today we're going to be talking about financial stress. And our guest is Rachel Zilonka, who's Executive Business Development Director of Sunmark Credit Union. I want to welcome you here, Rachel.
Thank you, Richard.
You've done a lot of good things for educating people in terms of their finances. I know you won awards for it.
Yep. In 2005, I worked with the Credit Union Foundation, and we utilize a program called Your Path to Financial Freedom, and it's geared toward low to moderate income households. And what we do is we work with local nonprofit organizations to help individuals within those populations really get the confidence they need to fully manage their money. So we've worked with local housing authorities, nonprofit organizations, and we've had a tremendous success rate.
So does that keep you pretty busy?
It keeps me pretty busy. Actually, I am more of the coordinator now, and we train our staff, and now they've been going out into 5 counties. So we initially piloted it with the Schenectady Municipal Housing Authority, and now we've actually expanded it into another 4 counties, Montgomery and Saratoga and Albany County. So
great, Albany County, okay.
Yeah.
How could somebody take advantage of that? Or
well, we just finished up our spring session, so for someone who was interested in that, they could check out the credit union's website.
Okay, Sunmark Credit Union.
Yep.
And what's the website?
It's www.sunmarkfcu.org.
That's pretty easy.
Yep.
Okay, good.
And they can look on the free educational classes.
Fantastic.
Yeah.
What we want to talk about the most is something I know that's close to your heart, and that is financial literacy and removing the stress that people have from not having enough money. I came across a quote that I read to you before, and I want to read it now because it seems like a good introduction to what we're doing. And the quote was by John Bryant, who founded Operation Hope. He said, "Take the greed," and we're talking about the Alt-A, which is spread to, and the big meltdown in housing. I'm blocking on the type of loan,
like subprime.
Subprime.
Yeah.
The key word is subprime. So we're talking about that atmosphere. Take the greed and the financial representation out of it, and the root of the crisis is massive levels of financial illiteracy.
Right.
So that kind of hits hard.
I mean, Richard, financial stress is really widespread, and it's a serious problem for Americans. And typically, people who feel financially stressed, they have a number of health problems associated with that. So someone who is feeling financially stressed, they might be losing sleep. And when they're losing sleep, they might reduce their cognitive abilities. They will not be as productive at work. So there's certainly a lot of different components that relate health-wise to financial stress.
So these are costs that not only the individual then is going to bear, but society at large.
Absolutely. People who are financially stressed, there's demonstrated statistics that there's increased absenteeism. I read a statistic that people are using 20 hours a month to take care of financial problems. They're using the telephone, so they're being distracted. 20 hours a month, that's a lot of time.
That's a lot of time.
That's being kind of fiddled away because of financial problems.
And I would assume medically or psychologically that when this extends over a long period of time, this really can have a huge effect on your health, and not to mention your standard of living, your mental standard of living, how happy you are.
Absolutely, because if you're losing sleep, then your immune system might be a little bit compromised, and you might be more likely to get some type of illness. Plus, it causes moodiness and frustration. So, and even there's been statistics of coronary disease. So, certainly, stress isn't just physical.
It's mental too.
It's mental, yeah.
Yeah. Well, and I guess people who would hear that would say, yeah, tell me about it.
Right.
Because it's not a secret to them.
Right. Yeah. I mean, so many individuals struggle with it. So it's really important for individuals to get their finances in order. There's another statistic out there that 70% of Americans live paycheck to paycheck. And what that means is that they worry about paying their bills every month. And research has actually shown that over half of all workers have money problems, and that, you know, it's linked to these health problems like depression.
And that's really bad.
Absolutely.
I think the main thing we want to do today is talk about some of the things that people can do in order to get themselves out of these cycles. But a couple of things I want to touch on first, because they're so pervasive right now. One is the subprime.
Right.
What's going on? I mean, is it too late now for everybody? Are people still possibly making mistakes here? Or is it now we're just cleaning up the mess?
You know, I think that a lot of it is just cleaning up the mess. And to be honest, I'm not as knowledgeable on the mortgage side of the finances, but it's my understanding that what had happened was that individuals were put into these mortgages, interest-only mortgages that they couldn't afford. And now that the interest-only portion of that has ended, they're required to pay the fixed and interest, which is making their payments actually double. But I know that there are more stringent rules in terms of underwriting mortgages, and
now people are afraid, the banks are afraid to even touch the paper, so they don't want it anymore.
You got it. I mean, it's very stringent. It's not like it used to be.
Right.
Which I personally think is better, because the last thing you want to do is put someone into a home where there's so many additional expenses. You need to get a lawnmower, a snow blower. You're going to have to maybe get curtains, or
all those
so
things.
Many, right, additional expenses. So if you're just making the interest-only payment, and then you have to go out and get all these other assets and things
Right.
to help maintain your house, then, you know, it's really going to
It's more expensive than even you thought, but double is just out there in the stratosphere.
Right.
I think I was just reading some statistics yesterday. A lot of the people that got in trouble start out with an adjustable rate mortgage.
Right.
And didn't pay attention and didn't read carefully,
Right.
which is always an issue.
Right.
And they then find that suddenly it goes up. And I know banks were selling adjustable rate mortgages, probably not expecting that things would get out of hand like this.
Right.
I don't know, maybe you're not the person to ask this part, but are adjustable rate mortgages always bad?
You know, that's a tough question. It depends on that person's individual situation. So sometimes someone knows that they're only going to be in that home for, let's say, 5 years. So in a situation like that, that would be a really good idea, because if you have prime right now at 5% or 5.25%, then being at 5% or 5.25% for 5 years is really good idea. So you'll have that maybe fixed for 5 years, and then it goes adjustable, or it might be the opposite. It's adjustable for a little while and then it goes fixed.
Right.
So I would really, that's a tough question
We
to
wouldn't
answer.
say that then.
Yeah, I would say that it's really specific to someone's individual situation.
Okay. Well, then let's go to the second thing that I think is, really big, and that is credit card debt.
Yes.
It doesn't take a genius anymore to say you shouldn't have big credit card debt, but
Right.
I know we're going to have to deal with how do people get out of this. So
Right.
let's just touch on that a little bit.
Well, it's funny that you say that. I mean, reducing debt really isn't a high priority for people until they've already gotten into trouble for overspending. And that's what I've tend to see, is that someone will say, well, I only have a few $1,000s in credit card debt, and then when I actually will pull their credit and review it, that few $1,000s, maybe they thought it was like 7 or 8, is actually 15 or 18. So
Wow.
sometimes individuals have so many multiple cards that they don't even realize that it's a problem until it's actually addressed with them. I have some statistics that I'd like to share with
Sure.
you that are pretty staggering. There's roughly 1.2 billion credit cards in use in the United States right now.
And we only have about 300 million, so
Right.
that's an average of 4 if you count little children and 95-year-olds.
And that's another one, exactly. And there's actually, the average American has 9 credit cards.
9.
9 credit cards, and they have nearly 9,200 in
God, if that's the
unsecured debt.
average, imagine the higher ones.
Right. Yeah, worst case scenarios, I've seen upwards as $80,000 in credit card debt. Wow. And then interest rates on those credit cards, they run from like the mid-teens, mid to high teens. And a typical American family actually pays about $1,200 a year annually in interest. So I'm sure that there's so many other things that people could be doing with that $1,200 than putting interest.
Absolutely. Paying for our gas, for example.
Right, exactly.
Right. Okay, so we're into this situation, or someone is.
Right.
What do they do first? You know, the hammer has come down. Things
Right.
are, and I guess you have to look at different periods of time, because not everybody's in the same exact point. They haven't just gotten a message that they have to get out of their home.
Right.
And some are farther away from that. But where do we start? Where does a person start?
So if someone's struggling with, if they're in a debt situation, all of a sudden they realize that maybe this $2,000 or $3,000 is now like $5,000 to $7,000, and they just want to pay it off, they're really going to have to commit to that. I mean, you have to be committed to that goal, and what you're going to have to do is really look for ways that you can pay down that credit card debt. So if you're going to set a goal, you're going to make sure that it's measurable and specific. So you can say something like, I want to pay off this debt in 2 years. And what you'll do is you'll take that amount and just divide that by the 24 months and get that fixed payment around without interest, and really make that commitment that you are going to pay that off in that amount of time. The one thing, though, for people to realize is that sometimes things in life happen. So, you know, goals will need to be adjusted periodically. So if that is one of those goals, is I want to pay that off, and then let's say your car engine goes or something goes and you don't have that emergency savings account, then really, you know, they might have to go and put that on the credit card. So but they need to set that goal and commit to it. There's also other options. There's debt management counselors, and there's certified debt management counselors. It's really important for individuals to look for reputable.
How do you do that?
Well, there's a few good ones locally. There's Consumer Credit Counseling of Northeastern New York. They are a non-for-profit organization. They are an excellent organization.
You want to say that again?
Yep, it's Consumer Credit Counseling of Northeast. They're located right here on Wolf Road, I believe. And what they do is that you will give them a call, and they will pull your credit, and they will take a look and see if you would qualify for their debt management program. And essentially, they will negotiate with your creditors different payments and payment plans, and you make one payment to the credit counselor, and then they distribute out to your creditors. But there's also a lot of scams out there. So people will say, you know, we'll wipe your debt out in just like that. And I mean, if it seems too good to be true, it usually is. So
almost always, yeah.
Always. So I mean, really, it's so important for someone to look for a legitimate credit counselor. You do not pay for these things. My sister-in-law actually had a situation where she was looking into something, and she saw that it was $50 a month, and I said, $50 a month? You shouldn't be paying $50 a month for that. So
there's $600 that you could have put down on your credit card.
Right, exactly. So, but Consumer Credit Counseling is great. I believe they just charge one $50 fee, and that's to pull your credit, and that's it.
Well, it's really important, because the advice is crucial.
Right.
If you have had a hard time and you've gotten yourself into this with credit cards, it probably indicates a lack of appreciation for what's going on, the underlying dynamics.
Right.
And so, as the quote in the beginning said, it's people just not being trained. And I guess we don't want to blame them so much.
No.
Because this country, I read in this article also that we had, that the average person coming out of high school doesn't know almost anything.
Right.
And so they're going to go to college, they're leaving their family,
Right.
they know nothing about finance.
You know, money is a very private thing. I mean, a lot of people, it's a very personal and private thing. So a lot of times your parents aren't going to sit there and open up their checkbook and say, well, this is how much we make and this is how you should manage it. I mean, I know I was not taught how to manage my money at home. I went to college and I had the credit card companies sitting right outside of my student office
See
there.
vultures.
Right, exactly. And they said, open a credit card and we'll give you a free candy bar. I was like, yeah, that's great. I'll take the free candy bar, you know? So that's actually how I got my first credit card.
You're not kidding. It was really a candy bar.
It was a candy bar that I did.
A version of take the candy from the baby when they know what candy they want. Okay, so we know that it's not good to take out credit cards you don't need.
Right.
We know that there are people out there ready to prey on the unsuspecting, and they really do a good job of it. So
Right.
to some extent, it's maybe society's fault that we don't police some of this better.
Right.
But okay, so the first step is maybe some counseling and figuring out how you would be able to save enough. Because certainly that $15 or whatever, that little amount that they suggest as a minimum payment is really a step to them getting a higher interest cut.
You got it. I mean, it is. It's just setting that priority and that commitment to get out of debt. And I think if someone is in this situation where they're financially stressed, the first thing that they need to do is they're going to have to take a look at their entire financial position. And I don't fault individuals for not doing it to date because life is busy. You're probably working, you have kids, you're running around. The last thing people are really looking at are their finances, when really this should be one of the first things that they're looking at. So what I would recommend for someone to do who might be in some type of financial trouble, or even if you're not in financial trouble, because you might even find ways that you can make your money work better for you. And I always tell people, it's not how much money you make, it's how you make your money work for you. Is it going to do what you want it to do? So I would say to set priorities. And each family really has different wants, needs, values, priority. Like a priority for me is I want to save enough money to send my daughter to school when she's 18. So I've already started to lay that foundation down to help her so she doesn't have to come out of school with debt. But that, a different priority, somebody might say, I want to retire by the time I'm age 55. So really what the first thing someone would need to do when analyzing their financial situation is to determine their priorities, and then once they have their priorities, what they're going to want to do is set goals. And there's 3 types of goals. The first goal is a short-term goal, and those are usually like 1 to 2 years. An example could be maybe paying off your credit card debt.
So you're taking a step in the right direction.
You
Okay.
got it. So just taking like one step, and then, okay, this will be the small goal. Let's say I have $5,000 credit card debt, and I want to pay it off in 2 years. So that would be a short-term goal. And then there's medium goals, and those are generally like 3 to 5 years. And that can be something like you wanted to save for a down payment for a car, or whatever it might be.
Or even 6 or 7 or 8 years on a car.
Right, exactly.
Yeah.
And then long-term goals are anything longer than 5 years, and that would be something like saving for your retirement or for a child's education.
Right. And a house, of course, is usually borrowed, so that would be a different plan.
Right, and that generally is someone would be saving for a down payment toward a house.
Right. Okay.
Yep.
Good.
Yep. So then after they were done figuring out their priorities, then what I would recommend them to do is take a look at a budget. And it's funny because I actually do a few seminars on budgeting, and I'll ask people, who has a budget? If you feel comfortable, tell me. And so a few people raise your hand. A lot of people go, my budget's up here.
Right.
And I said, well, that's good that, at least you're mentally keeping track of your budget, but it's really important to put that on paper, because your budget is, it helps you analyze your living costs and your expenditures.
I think I just thought of a good example of why what's in our head really doesn't work very well.
Yeah.
Even if we think we know math. I get a credit card bill.
Right.
We get a credit card bill each month. I pay
Yeah.
mine off,
Yeah.
and I only have 3, so it's
Yeah.
not like 9. But you'll have a list of things that you bought.
Right.
And the first reaction is you look at the total and you go, wow,
Right.
that can't add up to this.
Right.
And then you add it up.
Right.
It does.
Right. And that brings me to a really good point, is that once you set those goals and you're thinking about the budget, the first thing that you should do is you should audit your pocket money
Okay.
and audit your money. So what I tell people to do is carry a spiral notebook around, and every purchase down to the penny, keep track of what you're spending, because what happens is you go to the ATM, you take $20 out, and then you get home and you're like, God,
Where'd it go?
what did I do with that $20? Probably went to some coffee, maybe some lunch, maybe a little
12.
Right. So you don't really know, and sometimes I'll meet individuals and they'll say, I just don't have money to pay my bills, and I'll say, well, keep track of your money, do this for a few weeks and audit your pocket money, audit the credit card statement, audit everything you're spending, and just indicate how you're actually spending it. And then what you're going to do is you're going to take that information and you're going to put that into a budget. So you're going to have your current, which you're actually spending in different categories like food or housing or clothing, and then you're going to have your proposed and what you want to spend.
So I shouldn't spend $1,000 a year on my lattes.
Probably not. But you know what, Richard? If that's a priority for you, then you can.
It's not actually.
Everyone has different priorities, so no expenditure is right or wrong.
I was thinking of Adam actually
Right.
in the comic strip, because he buys a lot of lattes and his wife works in a bookstore, so I'm thinking she's got to work a lot of hours for those lattes.
So that's the first component of a budget, is actually figuring out what you're actually spending.
So you're doing kind of an audit.
Actually, yep. You're auditing your
yourself.
pocket money. Yeah, you are. You're auditing yourself to see where the money goes. And I personally realized I was spending $30 a month on soda from the vending machine. So I could have just went and bought 2 cases of soda for maybe $7 or $8 and saved the rest of that money.
$22.
Right, and put that toward one of my
$250
goals.
a year.
Right, exactly. So those are just simple ways that you can save money.
And that's after-tax money, so
Right.
it's much worse.
Right, exactly.
Okay, so we have, let's see, let's recapitulate. Where are we? We've looked at our situation. We've set goals.
Right, set your goals.
It's short,
Yep,
and then medium and long term.
you got it.
Okay. And then we need to budget, but we need to find out what we're spending.
Right, so you're going to audit the pocket money.
Okay. So we got those 2 steps down. Now what do we do?
And then the next step really is to figure out what are fixed expenses,
Okay.
what are variable expenses, and then there's things called living expenses. So fixed expenses are generally things like your house payment or your rent payment.
Hard to change.
Right, hard to change, exactly. So these are your essential costs.
Okay.
And then there's things that are actually reducible or living expenses. So these could be things like your food shopping. And I was speaking with you earlier about the example that we need to eat, right? But it doesn't have to necessarily be an expensive steak.
Right.
So then that is the second part of an expense when thinking about your budget. And then the third expense are really like reducible expenses, things you can do without. That can be like recreational activities, magazine subscriptions.
A
You
new
can go to the
wristwatch.
library and get the magazine.
Right.
Right. Seriously. So there's ways people might be spending money to do that, but they realize that there's other like low cost or free options for them.
And that's why the library is here,
Right.
for one reason, anyway.
Right, exactly. So what you'll do is you'll actually categorize those expenses and figure out what categories do they go into. So the
So
housing
maybe at
would
the
go
top
fixed,
you would put the fixed, and then in the middle the,
reducible, like living expenses.
Okay.
And then like we need to drive our car so we could get to work.
so
But
gas is,
for gas, but so that's something that we need, but it's not necessarily something that I guess you could do without it, but I mean, you really would have to figure out trips. So try not to make unnecessary trips. So
Right.
there's things, so it's reducible
Right.
in certain ways.
And look for a cheaper station, which more people are doing.
You got it,
Yeah.
exactly. So then once you have those expenses categorized and you really know where you're spending your money, what you're going to do is you're going to take your income, and I always tell people, do not overestimate your income, because what happens is people say, well, I'm going to get a bonus this week, or I'm going to work overtime. So they might say like their income this month is going to be $3,000, but then next month it's going to be $2,000. So when you're doing your budget and you're trying to figure out your income, be conservative. Don't take tips in, don't take overtime in, don't take bonuses in. Just be conservative of what you know
You're going to get.
you're going to get.
Okay.
Absolutely. And then you're going to basically just take all those expenses up, and you're going to add them all up. And if your expenses are less than what your income is, then you're doing a great job.
Okay.
And if they're not, then what you're going to have to do is look for ways to cut back, so you're not in a situation, an escalating debt situation where you're using credit cards as an extension of your income.
And so you really need to be matching your expenses to this budget, or you won't even know.
Right,
So that goes back to the auditing.
right. Yep.
Yeah, Christmas is difficult, and all these things are difficult.
Right. And I always tell people, set up multiple savings accounts, and that brings me to a good point that you bring up, is like Christmas or separate things. One of the most important things that someone needs to add into their budget is a savings line. That has to be, you should always pay yourself first, no matter what, even if it's $5 a week. Something. You can find that $5, whether you stop drinking a latte or you bring your lunch to work, whatever it might be, but start putting some money aside in a savings account. And you might feel like, well, $5, it's not that much money, it's not going to add up. It will. And then when you need brakes on your car and you need $600, you're going to have it there, and you're not going to go onto your credit card.
And then you don't have to worry, what happens if my brakes are a little squeaky?
Right.
Do I have to just drive a little longer, or can I?
Right.
Yeah.
Right, which
That's
could
good.
add stress. So
Right.
I always tell people, and savings tends to be the last thing that people do. There's other priorities that take place, and it should be the first thing that you do. And I always tell people, well, if you're not worth being paid first, then who is? You should always pay yourself first, no matter what.
And that's kind of a neat phrase, paying yourself, because obviously, okay, I'm paying myself, but what am I going to do with the money? And
Right.
and the way you're using it, you're investing in your future.
Right.
So that's kind of neat.
And you're protecting your livelihood, because one of the things that people don't, generally people are forced into a financial situation, some type of financially stressful situation, is because something happened. You can't predict the unpredictable. So maybe they lost their job, or they got divorced, or something horrific happened. And what happened was they didn't have that reserve, a little bit of a reserve. And standard is, they say to have 3 months of your income. Personally, I feel like that's really steep. A lot of people don't have 3 months of income. I always tell people to at least try to cover your fixed expenses, like your mortgage or your rent. Those fixed expenses, your card payment, things that you actually need to live and to get by, maybe for those months when you're down and out, so to say.
Or it strikes me that another aspect of that is the cash flow issue. If you're constantly worried about covering the check,
Right.
now you're going to be having to time it so that your check is in there so that you can pay your bill,
Right.
which is also very stressful. If you could be just one ahead,
Right.
now you know that there's money in there
Right.
for at least another month.
Right.
Yeah.
And there's so many places to find money. People can look at their insurance policies and see that perhaps they can get a different insurance holder and maybe save a few bucks. Or even with your loans, shop around for interest rates. We save people all the time money. Even if we're dropping the payment by $5 to $10 over the life of the loan, that might be $500 that they're saving. So look at your utility bills. See if perhaps you can get a better option on your cable, or do you even need cable? I always tell people, if you can't pay your current bills, I'm like, what kind of cable package do you have? Do you really need to have Roadrunner right now? Can you go down to basic cable? Can you do
Right.
that so you can, pay off this debt and that you're not going to lose your heat? You're not in collection with the heating company. So there's a lot of places.
Better to be warm.
Right, exactly, than
Yeah.
watching TV. So there's a lot of places really that individuals can find money, but it's a behavioral change, and it's hard. And I'm not going to sit here and say that it's easy, because it's definitely hard. But if there's certain things that you want, you're going to have to make sacrifices. And a good example is when we were saving for a down payment personally on my house, what we did was we kind of reevaluated all of our finances. I owed my pocket money. This is kind of silly, but I realized I was spending, $40 to $50 to get fancy nails done every month. But I stopped getting my nails done, so that was one little sacrifice, but I ended up saving a lot of money over the year, which again gave us money toward that down payment. And so we found a bunch of different places that we could cut back on those non-essentials, really, because getting your nails done is really a non-essential. But I wanted to get that house, so that I kept my eye.
It just
on
seems
the
like if
goal.
you looked at it from afar, that the house is a little better
Right,
than the nails. Yeah.
Exactly. Yep.
Yeah. I think you have a wonderful advantage in terms of internalizing all this, because you get to talk to people all the time who have troubles.
Right.
And so other people, they just work all the time, and they don't really have that touch with all the other people, and they sit there thinking they're the only one.
Right.
And yet, like from the Millionaire Next Door, we know that many times people who even have maybe $1 million home may have nothing
Right.
except a lot of debt.
Right. And it's pretty disheartening for me to meet people in such financially stressful situations, because we do the best we can to try to help them, but sometimes the situation is too hard that we'll have to refer them out to different credit counselors, or maybe back to the company where they're having a problem. One thing I'd like to bring up is that if someone is in a situation where they can't pay their bills, the worst thing that they can do is to just say, well, I'm just going to pretend like that's not there, because actually what happens is that bill will go to collection. So now not only are you going to be required to pay whatever the bill was, but you're going to have to pay collector fees as well. So something that might have started out with a $300 utility bill could now be as close as $700 because of the fees attached to it. And we're people. So if you call and say, hey, listen, I got laid off right now. Can I make minimum payments? Or can I extend my term on this loan? Or this is what's going on. I would strongly encourage people to call their creditors if they're having some type of financial hardship, because they want to help you. They don't want to see you struggle.
And they want to get paid eventually.
You got it. That too.
So I guess, what's the best way for someone to get advice? We've laid out a lot of things. There are books in the library that people could come and we could hand them saying how to do this,
Right.
how to set up a budget, or,
Right.
but sometimes it's easier just to make a call.
Right.
What would be something that would be available to someone, at least to get them started, for some advice of who to turn to next?
I mean, they can always turn to their local financial institution. I'm sure they'll have individuals there willing to sit down and kind of discuss.
So just ask again.
Just ask. That's it. All you have to do is ask. And I think what happens too is it's embarrassing for some people, and they'll say this is what's going on, or they'll pull me aside. And I'm like, don't worry. I'm like, you're not alone. There's a lot of people in the same situation.
Especially now.
Right. And I know that members of our credit union, we actually started offering this program called Balance, which is financial fitness program, and they're certified financial counselors that they could call. They have great hours up till 11 o'clock at night. So
super.
Yeah, individuals can call there. But I mean, all you have to do is ask. The worst thing you could do is just ignore, because it's going to get worse.
Good advice.
Yeah.
Well, Rachel, I want to thank you for coming and talking to us.
Thank you for having me.
This has been good. I hope people can take it to heart.
Absolutely. Absolutely. Thank you.
You're welcome. And I want to thank you for watching. I hope you enjoyed the show and that you'll watch us again next time. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.